Hey guys, welcome to another episode of The Idea Is podcast. Today I have Dave and Jordy Browne from Browne Mortgages, and we're going to go over everything mortgages, from first home buyers to rates and what they're seeing in the market right now, tips, and we're just going to let the conversation go where it goes. And I think we could start with, why don't we start with a market update on just what you guys are seeing as far as like numbers. We've been talking offline. We were talking about numbers of applications. And so if we want to start there, like what you guys are seeing for trends, and then what you're seeing for trends as far as borrowing rates and stuff like that.
Sure. Applications are up. Yeah, a wee bit over year.
Yeah.
Historically, I would say they're down.
Okay.
Over a 10-year trend. There's something bubbling in the market. We're seeing offers, losing offers.
Right.
On clients that are pre-approved, ready to go 30 days ago, could have beat that seller up.
Yeah. Isn't that crazy? 30 days ago. It's changed a lot in 30 days. Yeah. Like I had a place listed since June, and it sat since June. We had a massive price decrease. It still sat. And then the weekend we sold it, we had 3 different people wanting to write on it. Yeah. And we got a verbal, a written, and someone saying, if it doesn't go, let us know.
I had an offer the other day that I heard about, 23 offers. In detached house.
Was it one of those like?
I think it's a one-off.
No,
these multiples.
it was priced to what they believe the price was.
Not like a predatory introductory price.
They're wondering now if they underpriced
right.
it, but they priced it based on the comps that were out there.
Crazy.
So, it's stability.
Yeah.
Stability in the market. Stability in rates.
Yeah.
Last year, government said they were going to hold rates just hold rates.
Yeah.
And the market went nuts.
Yeah.
People just want to know that their payment's not going to be higher next month.
Yeah.
So as long as there's stability, you'll see the market move. People call it that we're pre-approved last year. June, decided to hold off. As soon as the government said we're going to raise rates again, okay, we're holding off. And now they're calling back again. So all we need is stability.
Yeah.
And that will keep prices, I think, pretty stable too.
Okay. Yeah. So we see a lot of people, like if you follow any kind of content online, there's a lot of people saying rate drops are coming and that type of thing. What I'm not asking you to speculate because that's not fair. Let's do it. Let's do it.
I saw rates were going to drop at the end of 22.
Yeah.
Rates were going to drop at the end of 23.
Right.
Now rates were going to drop at the spring of 24. Everyone's been wrong. When rates were increasing, all the banks made predictions how much rates would increase.
Yeah.
Scotiabank was the most aggressive. They said rates will increase 2%. People said, you're insane. Rates went up 4.5%.
Right.
So these predictions, don't believe any of them.
Yeah.
But they do price in expectations of where the market's going in within the bond market. And it was supposed to be spring, but if you look at jobs numbers, today was through the roof.
Yeah.
It's good. It's being pushed back now. So you're not seeing rate increases, which is that stability.
Yeah.
But you're going to see probably no decreases till mid-late this year.
Okay.
With that being said,
the
next jobs numbers could come in that we lost $500,000 jobs.
Right.
It could be right back into March. So no one knows.
Yeah.
But
didn't we lost jobs in December, right? Is that right? Or was it just not as much increase as they expected?
Exactly.
Okay.
And here's the thing is, everyone looks at, it kind of gained 100,000 jobs. Well, they actually lost, this is an example, they lost 200,000 full-time or 100,000 full-time jobs, but gained 200,000 part-time jobs.
Right.
It's not good for the economy.
Right.
So you have to actually delve into those numbers a bit more to understand if that report's good or not.
Sure.
So
yeah, it makes sense. So number of applications is still like week over week. The last few weeks has been up.
Yeah.
So for your buyer clients, what does that mean to them? Like why should they care that applications are up?
About the stability, as Jordy said, now rates are not going up.
Yeah.
They're basically firmly saying.
Right.
They put the idea of rate increases so far on the back burner. In fact, they unplugged the stove. But I think, like you say, even with good job reports and stuff, they want to bring these rates back down to help certain pockets of the economy.
Yeah.
They don't want to help housing them.
Right.
And that's one of the issues. They're trying to keep affordability down. So I think what we're going to see now is rate drops. And that's where the applications are coming from.
Right.
They don't know if it's a year from now.
Yeah.
When it happens, it's going to be potentially 2%.
Wow.
And
they only drop over 0.25%. They never drop it like.
But the full realization of it.
Right. Over a time.
If it took 24 months to get up 4%, we see over the next 24 months it going down 2%.
Right.
When that starts, we just don't know. But I think that's where the applications came from.
Okay.
The news is positive.
Yeah.
That we're probably holding where we are.
Yeah. So with applications, I think about from the purchasing or buying the actual house side. When applications are up, to me, if I'm representing buyers or if I'm a buyer myself, then I'm thinking more competition,
100%.
less opportunity to buy the house. When I find the house I've been looking for, less opportunity to buy it or more people at the table. Probably some increased pricing 3 months from now than where we are right now. You guys had mentioned before we started shooting this that you've seen some people actually lose houses, and one house had 20 plus offers on it. Like we were there in 22. Then we had like a 1 month window of that last year in like April. And then we've been pretty stable on the buyer seller balance. But
it's I just want to know market. I hate these bids.
They're crazy.
No bids. The applications, my first week of January was the highest I've had probably in 2 years for that week. The thing is, it's about 95 days from the day we take an application to the day they complete our house.
That's good information to have.
So anything we're seeing now is April completion.
Right.
So you probably, if we're increasing and every other broker I talk to is increasing, you're going to have more offers on houses. And unfortunately, the house of supply. Is there supply out there to take on more offers?
The supply hasn't been ramping up. Like if you look at when you log into Paragon every day, you can see the month over month and then the year over the year. It's not like all of a sudden, like we're hearing of all, and we've been telling our buyers this, like applications are up, more buyers are coming to market, but there's not a whole bunch of new listings.
Supply has been an issue for a decade. And all the developers paused a lot of their stuff. Going through this last 2 years. So for them to ramp back up is going to take a while. I think buyers are going to see some competition.
And so I agree, Jordy, what you said, like just some stability in the real estate market as well, so that people know at least what the expectation is when they get in. What's crazy is when you get in and there's a house in West Abbotsford that's listed 200,000 under and it sells and it has 27 offers on a direction of offers. That's hard for everyone but the seller to participate properly. And because the one person that gets it, they feel like, oh, did I overpay? And the 25 that didn't get it are on to the next one. And the seller, they wonder did they do it right as well. So I prefer a balanced market. And I actually was went to the Realtor Collective last week. And there was a presentation on actually by a guy from Ottawa. And he's like, you don't realize how balanced it still actually is. It's not a buyer's market like everyone's saying it is. Homes are still selling for 97% of ask price, list price. I think there's a little bit of because people adjust prices, it doesn't always for example, when we sold for $999, we started at $1,249. So did we really sell for 99.9% of our list price, or did we sell for 84%? Right, and that gets lost a little bit in the stats. But days on market under 30 days is still actually swayed towards seller, and that percentage to list price is still.
Buyers have to look at that stat. They don't have access to what they can get access to, but no one focuses on it.
Right.
Doesn't, and that's either inventory months on market, the average, or your sales to listing ratio. And if you find that pocket of sales to listing ratio where it's a balanced market, it's probably been there for a long, long time.
A long time.
And there's not been a buyers to sellers. Last spring was a great market. It was, prices went up. Buyers were excited. Rates were about the same as what we are right now. And that got the people excited.
When I think about what you guys do, and that's working with buyers, whether it's they're selling a house and buying or they're buying their first home, I think about it sounds cliche, now's an amazing time to buy. But I just think the people who have bought since October of last year up to probably May or June of this year we're in now are going to look like they had a good foresight compared to some people who will follow the rush in, overpay, and regret. But
I don't think we have many investors coming in. They're not who are trying to time.
If
you're buying in a market You're buying for yourself.
That's what I'm saying. Like people buying their homes.
Just buy in and try to get as many cycles under your belt as possible.
Right.
The younger you are, the more cycles you see. Every cycle means a potential doubling in values in this area.
Yeah.
You know, if you get 3 of those in your life instead of 2.
Yeah.
You know,
a doubling is insane. Like,
but it happens.
Yeah, absolutely. I mean, I know you guys have properties that's done it. Like we paid $895 for this place only 7 years ago.
Yeah. Yeah. You and I bought the exact same time.
Yeah.
And we bought around the same price.
Yeah.
I thought you were insane spending what you were.
Both of you guys. Everyone that's ever bought.
So I wasn't a realtor. Neither was Heidi when we bought this. Yeah. And I remember saying to our realtor, it will never be worth more than it is today. Yeah. Yeah. And he looked at me like, you don't know what you're talking about. Yeah. And then he showed me stats and history, and I didn't know what I was talking about.
I'm a huge stats guy.
Yeah, that's all I do now.
So I can tell you stats. Some might say the market might go down. Some might say the market go up. A good example is actually interest rates. For every 1% rates go up, prices have to drop about 10% for the payments to stay the same.
Right.
Rates went up 4.5%.
Right.
Prices didn't drop 45%.
Right.
They might have dropped at one point 25% and then crept up another 10%.
Yeah.
So I don't think rates correlate to the market as much as people believe.
Right.
And I keep hearing that, as soon as rates drop, prices are going to go up. It might create more activity, but people still have to qualify for these mortgages. So rates drop 1%. Yes, they can qualify for 10% more house, but maybe now they just don't need a cosigner.
Yeah.
Maybe they just qualify for this house on their own.
Right.
Or they don't need to borrow money from mom and dad to get that house. I think it will be busier. Do I think it causes prices to go up? No.
Yeah, I think it has more of an impact on demand than this. And I know demand has an impact on price, but I think it has a more tangible impact on demand.
Yeah.
And that's what we saw is because it's not like pre-COVID, the homes were down $300,000-400,000 on a detached on some of these homes, right? Or down 30% from where they are right now. And then COVID hit, everything skyrocketed, as we well know.
Yeah.
But it's not like once rates went up, prices plummeted.
Yeah.
So demand dropped for sure. You could definitely see that in 23. Demand dropped, but it's not like the prices dropped as much as the demand did.
From the peak, it dropped at least 20%.
Yeah.
That's actually a massive drop.
Right.
I went back to 07 recently. And pulled up stats from that. Because I was trying to figure out, they started dropping rates in like November of 2007.
Yeah.
House prices didn't start dropping, or didn't start dropping till 8 months after they started dropping rates.
Oh, okay.
And because if you remember 08, the economy crashed at that point.
Yeah.
Lehman Brothers went under, everyone lost their jobs. And I bring Chef Boyardee to the office. You were bringing Mr. Noodles because we thought we were going to be the poorest people alive. We're in the real estate industry, and the real estate is ended.
Right.
We were unemployed for 8 months.
Yeah.
You were prospectors for 8 months.
Yeah. But the house prices, it's funny because prices started dropping, or rates started dropping when the economy really started getting hit.
Yeah.
And maybe we'll see that here in the future, that people start losing their jobs, and that's unfortunate.
Yeah.
And that's going to dictate the price or the rate drops.
Yeah.
But I don't think we're going to see any price drops in this scenario as much as because we've already seen 25% one.
Yeah.
Back then they would build subdivisions.
Right.
And half of them would be empty.
Yeah.
What are we building? Like,
yeah,
show me a subdivision that's getting built right now.
Yeah.
I don't see it.
That's why I'm really excited to see when Cooper Meadows, for anyone that lives in Abbotsford, when that actually starts. Yeah. So I just did a video the other day. They're excavating beside my parents' house. And it's getting real, as I said in the video. Like my dad, he was like, no, we're fine. Like we'll stick it out. And then he's like, we might need to sell.
Yeah,
like because it got real all of a sudden, right? Like excavators, they're putting a retention pond in the end of York Avenue. Mm-hmm. And so for him, all of a sudden it's like, they're going to be he's lived on a dead end, the last house on a dead end for 40 years. Yeah. And now those yellow traffic blocks are coming out. They're going to dig the concrete up. They're going to put a giant retention pond in for the time being that will then tie into the sewer and storm. And, what I'm curious to see, though, from a real estate side is what it's going to look like when they start building detached homes in there, because it's mixed use in there. There's going to be detached homes. You guys know this well. Yeah, there's going to be detached homes. There's going to be mixed use homes with commercial and townhouses. There's going to be condos. Yeah. So it'll be weird. You don't see a lot of like subdivisions going in anymore. No, so will it be a subdivision, or will it be like a master plan, like Sunspring Estates right behind us.
It's a mix.
You know, they're like compact micro lots, 3,400 square feet, 3,500 square feet, that type of thing. But you're so used to seeing these pre-builds are just condos and townhouses. It will be cool to see some detached finally being built again.
Yeah. Oh, the last one was in the East Abbotsford.
Yeah.
Augustin?
Yeah.
And that's 20 years.
Yeah.
Can you name a subdivision being built?
Eagle Mountain keeps expanding. But
But that's a price point that,
Well, the land is still
Yeah.
But yeah.
Oh, they built, what's the one off of Ross Road? They're all named after wine. Peppenbrook. Yeah, Merlot, Chardonnay. Just a bunch of lushes over there.
And when you buy the house, you have to have your pink yellow.
Totally. Yeah.
Back to 2007. There's one stat I just want to point out about that. The world was ending. I mean, Chef Boyardee, Dave's eating whatever he was eating.
I'll say sell it. We're getting recorded, right?
Yeah.
I looked at the prices. Go back from 07 to like 09.
Yeah.
The prices only dropped in Abbotsford just over 10%.
Right.
I remember it being the end of the world.
Right.
The prices just dropped 25%.
Yeah.
And I thought that was, we are due for that.
Yeah.
And the end of the world, it dropped less. And the rates dropped at that time from 07, November 07 to like the beginning of 09 or mid 09, dropped 4%.
Yeah.
Rates dropped 4%.
Right.
That means people can afford 40% more house.
Yeah.
Houses didn't go up 40%. They actually just stayed flat.
Right.
They did stay flat. They bumped up slowly.
Yeah.
So when you hit these big markets,
2015, Harbor 15 is when it boomed.
It didn't boom. It's just like from 10 to 15, it just crept up.
Yeah.
Stable market that we were talking about.
Yeah.
2% a year.
Yeah.
Like I hope people buying houses don't expect them to double next year.
Right.
I love the stable market that we might come into. It happened in the 90s.
Yeah.
It just went up a little bit, like a whole decade.
Yeah.
2%. Yeah. Their focus, if we go back into that cycle, we should go back to how our parents looked at houses. I have to pay down this debt.
Yeah.
I bought this house. I want to pay off this mortgage.
Right.
And that should be our new structure when people, whatever the bank is talking to clients, how can we pay down this debt faster?
Right.
If you get the gravy on top of the house going up, great. But let's make sure we structure.
Yeah.
Well, that was the problem with the artificial boom, and we'll call it COVID, I guess, for 2021.
Yeah.
Was the money was free.
Yeah.
So you just borrow it, and strategy,
money was free, and you could get checks.
Don't pay off this debt.
Yeah.
You know, like borrow as much as you can.
It's the cheapest money you're ever going to get.
Yeah.
Yeah.
It was literally free. And
then it wasn't real quick.
So we had an artificial boom up, and that's probably why it went up a little bit more than when they dropped rates previously too. It was free.
Yeah.
You know. Yeah. And then people are now back holding those debts.
Yeah.
Much higher rates. So
right.
Again, I was expecting much quicker, higher correction.
Yeah.
But Vancouver, Lower Mainland is super resilient. You did see drops across the country in other areas.
Yeah.
But you know, we were down 30% in chill before the spring bump up last year.
Yeah.
And then it came back down.
Yeah.
I mean, there has been a major correction.
Yeah.
If you just want a price point buy, like an investor.
But you're never going to buy a detached home on Promontory for $500,000 again. No. That's never going to happen again.
Right.
And I think there's people out there that
$50,000 like our parents.
Yeah. There's people out there that think that like that we're in this crazy bubble and houses are going to go back to, like, let's talk about Abbotsford where we are. Like that detached homes are going to be $550,000 again. That's just not going to be the case. No. Minimum wage is $1,550.
Right.
Why?
Right. It's never. They were $500,000. Nice detached homes were $500,000 when minimum wage was $7.
Yeah, it was even under that. Like,
it might have been, yeah.
When I first bought, I think my minimum wage was $5.
Wow,
I bought a house for $246.
Yeah.
In Abbotsford, my father owned a real estate company.
Right.
He said, "You're insane. That price is way too high. 700 square foot house by the tennis bubble."
Yeah.
I'm like, "Oh my God, there's no stuff. Maybe I shouldn't buy." I'm like, "But my mortgage payment is what I would rent for." So I bought it. My rate was 6%.
Right.
It was actually higher then than it is now.
Right.
Houses were a bit more affordable.
Yeah.
But I was okay spending that money because my rent was the same. So I think we just have to get that equal, where rents are close to.
Yeah.
And rents have been going up as we know.
Rents have gone up a lot,
we just need to either drop prices, rates go down a bit, get that perfect balance.
Yeah.
And tell you the truth, the rents were a bit cheaper than I could buy. And that's the way buying is.
Yeah.
But talking about first-time buyers, I mean, you were a plug-and-play situation with two very good incomes going into that. It was still concerning that people heard the price $236 and think, "Oh my goodness,
Yeah.
if I can only buy."
Yeah.
But when I bought, I had to buy. I got a detached house, but there was a hole in the roof. It was unlivable.
Really?
I had to then rent all the bedrooms out to buddies.
Was that the
on the Woodbine?
on Woodbine?
And it was, I mean, I can tell you the purchase price was $170, but
Yeah.
my wage didn't allow me to
Yeah.
really qualify for that either.
The percentage-
I had to
yeah.
rent rooms out, and it was unlivable. I had to do renos, and that's how I
Right.
got in the market.
Right.
So people got to realize they're not going to plug into granite countertops potentially.
Yeah.
Like you have to start somewhere. I'm seeing some people too, and banks are allowing this now. They used to not. As renters who've saved up money but still feel they can't enter the market at the price point they want to,
Yeah.
or maybe any price point, they're buying rental properties out in Hope and Chilliwack in these
Yeah.
affordable areas. Then they're letting renters pay it down, and then they're transferring that wealth to a detached home in a 10-year plan, maybe
Right.
in West Van,
Yeah.
Surrey, Langley, wherever it might be. So, but getting into the market, getting a piece of this blue chip investment, which we call BC real estate,
Yeah.
it's important.
Yeah.
It may not cash flow, but it is good.
You just made a good point. You bought a house for $180,000.
Yeah.
In what was that? 01, 02?
Yeah. Yeah.
You still rented all 4 rooms out because that's the only way you could afford it back then.
Yeah.
Yeah.
And so when I
It's
say that,
relative.
like, when I brought that flats in London,
Yeah.
where they had 6 people on a flat renting it out.
Yeah.
Well, we were doing the same thing. We just had a bit more square footage.
You're right.
Yeah.
Maybe the mentality has changed that people think I'm 21, I deserve a house.
Yeah.
And you bought a house, and I rented a room off you. My wife and I rented a room off you, and
right.
we had a buddy rent a room. And,
Yeah.
and
That's another podcast.
Yeah.
That's another conversation that I would love to get into.
so we came up with all our best ideas.
Yeah.
I'm going to be a mortgage broker.
But you made it work, and now people feel defeated and they can't make it work.
Yeah.
I've had lots of buddies go in, and I've helped them make co-ownership agreements.
Right.
Maybe it's on just a piece of paper, but
Yeah.
I show them how the structure works, how a buyout looks. I have clients right now that are selling from one of these, and they're both going on to move into their own detached places.
Right.
But they've owned together for 7 years, and it's these little steps. And one's married,
Yeah.
and his buddy,
Yeah.
and they bought a house together. And
Yeah.
that's how they got in.
Yeah.
And we're talking the best real estate in the world. Of course, it's not free.
Yeah.
But it's not going down. It's
Mhm.
always going to be stable and strong,
Yeah.
in my opinion, just based on supply and demand.
Yeah. Well, so Heidi and I talk a lot about the multi-generational. Let's talk about the borrowing side of that too, because I think there's going to be a couple of different trends that are going to come out of this. Like, I think our generation, we're all pretty close in age, is going to be pretty much the last generation, maybe 10 years younger than us still, but they're going to be the last ones that really have these dreams of buying a detached home and living in it with just their immediate family. I think we're going to see a lot more, as we've seen from development, we're going to see way more people buying townhouses and condos and being okay with raising a family in that. And then we're going to see people buying with their parents. And I think we're even going to see people pooling money with friends or colleagues. Like, I think that's the way it's, you guys had said something about look at other, Jordy, I think you said, look at other places in the world. Yeah. So we're not New York yet, but Vancouver is a world-class city now.
Yeah.
And the real estate is realizing that, right? And we're in the suburbs, of course, but it's all ramped up. Like, remember when Surrey was always 300 or 400 grand more? And now there's still a gap, but it's not as big of a gap because the whole landmass from Vancouver to Hope is like, one day it's going to be one big area, right?
Remember when there was a forest in between Langley and Surrey?
Yeah. Yeah.
Look at the forest in between Abbotsford and Langley.
Yeah.
That's going to be gone. Our kids are going to talk about the forest in between Langley and Abbotsford in the future.
Yeah. And so I think what you're going to see is you're going to see people move into these homes in all these different arrangements. And that's where, like, our kids will start to look at, like, okay, how am I going to buy a house? It's going to be, how am I going to buy a house with you guys, with us?
And we're not going to see it.
Right.
I probably do one mortgage a month at least, maybe more, just like that.
Yeah.
Where the parents are actually giving capital to buy the house.
Right.
Kids don't have any capital put in, but the parents are like, you know what, I'm retiring, I don't need as much space, but I want an awesome suite, so we're going to buy a more expensive place with a bedroom suite. We're going to give you $600 grand on this $1.2 million property.
Yeah.
You guys have to afford the other $600,000. I'm not paying anything in.
I'll never pay a mortgage again, and my place has to be nice.
And I've sold my $1 million property, so now I have $400,000.
Yeah.
Seeing it all over.
Okay. So that's
brilliant move.
Yeah, I think that we're going to see way more of that, and I think it'll be our generation that will be those parents. I think, I have a gran who still lives by herself in a house, detached house, in her 80s. Yeah. And I just think that you're going to see, like, maybe the boomers won't they might do it a bit, but you're going to see them hold on to their houses for a long time. A lot of them still live in their original house, and then they're going to sell and either downsize or go to a home. Like that will be a lot of them. But I think our generation will be the ones that are like, let's buy a nice house on a nice piece of property. Yeah. We'll live in the 1,200 square foot basement. Yeah. You can have the 2,500 or 2,000 square feet up top. Yeah. And then let's build a carriage home for your brother, or we'll rent that out too. And people are going to pool assets or pool resources, I should say.
And with the new rules by the government, you're going to be able to buy a house, put a suite in, and put a carriage home out back. Yeah. And your whole family could live on this one lot, and the lot doesn't need to be 30,000 square feet. Yeah. The lot can be just a regular city lot. Yeah. You can just all live on one lot. Yeah. Because to build a house, to build a 3,000 square foot house costs you $700,000, let's say. Yeah. Well, I just got a quote on that 2 weeks ago. So he said to build a nice home but not exquisite, basically, was about $350 a foot. 350? 350. Okay, my numbers are still low. I'm looking at the past. Well, and I was too, because I remember you used to bank it on 150. It was 150 a foot. I was
looking at a nice area, potentially thinking about building, and it's quoted, I could do it for $800,000 the house. Yeah. And the city lot, was $1 million. Right. That's the issue. That's what I used to have. Saying. $50,000 lot and a $150,000 bill. Yeah. 200, whatever it is. And so the land cost, and there's nothing you can do about that. Yeah.
But now we can break it up into 3 families sharing that one $800,000 land cost. Right. Now I'm paying like $250,000 for my land, and my parents are living above me or something like that. Yeah. I've now taken that cost and spread out between families. I think this is the future.
Me too.
Taking families and all buying one lot together or friends. Yeah. If Nash, if we got along,
if we liked each other.
But I could easily live in a carriage home. My wife and I would live in a carriage home out back. I'll take 30% of the property. Right. You're gonna live in the big house, 70%. We write an agreement. Yep. And
so can you, from a borrowing standpoint, can you lend for that too?
Anyone that's on title of the house has to be on the mortgage. Okay. So,
but it's not as difficult as maybe some potential buyers think it is it?
Some of the banks have maximum amount of borrowers, especially for where they can fractionally make the mortgage $100,000, $200,000, sure. $400,000. Yeah. So you sometimes cap it 4 people. Okay. So, but let's say you have 6 parties going in. You have to shop your mortgage a little bit more. You might start having people with 8. Right. When we're talking about this new government rules that are coming out May, June there. Yeah. You might have 4 little families, couples, that want 4 little units. Right. And we'll have to come up with a mortgage product maybe that is that diverse. Everyone have to understand they sign on each person's debt. Right. So, you buy with your parents, you can buy their half of the property free and clear. Yeah. And you're mortgaging the whole thing. Yeah. All parties are going to have to still sign on that debt. They don't do fractional mortgages anymore.
Right. So not only if you went in and your parents had all of their money in cash and you borrowed, they're assuming your debt load as well. You can't just default and they're free and clear.
Yeah. Right. And so it's going to be on their credit bureau that could affect. These are things that you have to talk about going into it. But generally,
you should know this stuff. If you're going to buy a home with someone else, you should know this stuff anyways.
Yeah. Oh yeah, we're talking this the very first second of my conversation. Yeah. You guys are thinking about buying together? Yeah. What other plans do you have? Right. This payment of your kids are going to show up on your credit bureau. How will that affect you? Are you planning on buying, recreational property or a truck? Yeah. And a lot of times these retirees, it doesn't affect them. They're not borrowing anymore. This, later stages, you don't want to take on debt. Yeah. And if you make money from borrowing, saying building, flipping houses, then we have to maybe structure it in a different way. Right. Maybe we put the house into a numbered company versus a personal name, which doesn't show up on your personal. Right. Right. So there's also ways to structure it, from a more corporate business point of view. Yeah. And we are talking business relationships here. Yeah. You're buying with buddies. Yeah. Yeah. So there's lots of ways to structure it.
And where people do buy places and they don't even realize that there's quite a few people buy rec properties with people outside their family, right? They'll split a lake home or they'll split a ski lodge up at Sun Peaks or whatever. It's not, I think the message I've been trying to get out is this multi-family or multi-generation option isn't as difficult. It's not for everybody. Yeah. I get that, but it's not as difficult to actually execute if you decide it is for you. Yeah. And the first step, in all aspects of real estate, I say the first step is to call someone like you guys, and just get the conversation started on, get an understanding of what documents you're going to need. Yeah. Get an understanding, even if it's, I don't know if you guys like doing this or not, but if it's a pre-approval, but just give them a sense of if they're thinking they can get $2 million, but really they can only get $1.2 million. Just guiding them into that.
What we do. That's our job.
Right.
The cinema district.
Yeah.
I just did one where two friends bought together.
There you go.
And the guy took a smaller percentage, lives in the suite.
Okay.
I think it's cinema district, townhomes with suites.
Yeah.
And so we took a smaller percentage, put less in on the down payment.
Yeah.
The upper guy was well.
He'll have less requirement of the strata payment and insurance and all. Yeah.
But they're just buddies and they bought together and they
why
have
not?
a 5-year plan.
Yeah.
And their plan is to sell in 5 years.
Yeah.
And then they said they had a backup plan. If they don't sell, then they get spouses and move out and buy their plan. They have a written out plan to rent this.
Nice.
And then that goes year by year.
Yeah.
You have to and both parties have to decide.
Yeah.
It's not. You say multi-family, and I don't think it's just families. It's
right.
Multi.
Yeah.
People.
Yeah. Yeah. Totally. I think there's so I worked at Cintas before here, and there was a lot of young, late 20s to mid 30s, that little pocket there where they weren't married yet. Yeah. And they were making, back then, I mean, 150 grand was unbelievable. But they made good money, but they would be hesitant to make moves, and a bunch of them rented places. And I would always tell them, why don't you guys buy a place together? Yeah. And one group did, but everyone else they were always really hesitant. And I know there's shortfalls that you need to be well aware of.
I had about 3 or 4 friends because I bought, coming from a real estate family, I wasn't intimidated.
Yeah.
I left my job, started the mortgage company. I don't know, 25, I'm going to guess, maybe younger. And I bought a house. And my buddies didn't know you could do that. They didn't even know it was an option, hadn't even known and discussed it.
Yeah.
And then they saw me, and within a year, I think 3 people had bought homes.
Yeah.
Yeah. And for me, it wasn't a leap of faith to do because it
was logical.
I grew up around real estate,
right.
Right. But it inspired a bunch of people.
Yeah.
So, and I'm seeing that, you see the pockets now.
Yeah.
Where one does it, 6 will do it from the friendship group.
Yeah.
And I've seen that even with the Cintas group.
Yeah.
But I'm looking at my houses right now. I drove by one yesterday for my 4 kids. Grade 6, grade 8, grade 9, grade 12.
Yeah.
And I was actually doing the math on it. They wouldn't go on title, but grade 12 was about to get into the working age or into university age. And I'm looking at turning that into the weddings I have to pay for, the first down payments I have to give them for their homes.
Yeah.
And maybe pass that fully on to them and then have them manage it. I actually talk to them all about the properties, what it looks like, what kind of work do they want to put in? Are they going to come help with yard work?
Yeah.
This is what the plan is. And we're talking, so I'm trying to just really educate them.
Yeah.
Using an example.
For sure.
But I think that's great as a parent. How many of us rented houses or rented something, we're like, why didn't I just buy it back then? Imagine if I bought that house where I'd be now.
Yeah.
As parents, that's our advice that we should pass on to kids. Or I help them. Go make an investment with your kid.
Yeah.
You have 5 buddies. They're all going to rent rooms for $700, $800. You can't rent an apartment for $1,600. They have maybe paid $1,000 for a room. For a whole house. And making an investment with your kid.
Yeah.
And you eventually, you help them with the down payment, you buy the property, and now you and your kid are partners. He's the landlord or the property manager.
Yeah.
And rent out to their buddies because they want out of their house.
Yeah.
They just can't afford it. They rent a place on their own. So they would love to rent a house with 5 bedrooms.
Yeah.
And if you're the one owning it, you're so far ahead.
Well, I give full credit to Heidi. How we even were able to make moves is her and Jen bought a place when Heidi was 18 and Jen was 19 or 20.
Their dad,
they helped with,
supportive of that.
Yeah, helped with down payment.
And they had the guts to do it too. They did very similar to what I did.
Yeah, they bought a townhouse on Winfield.
I remember.
And
and split it as sisters.
Yeah,
I mean, we're talking
split it as sisters, and then both took their equity once Jen and Corey got more serious. Split their equity. Heidi went and bought a condo on Center Street. I was just fortunate enough to trip into that. She was she trusted enough that I wasn't just there to try and take advantage, and luckily it all worked out. But that's a perfect example. Dylan he's bought a condo already. And he got in at a tough time. He got in when prices were inflated, and it dropped right after. But he brought in a roommate, and he still owns it now, and it's back to what it was, and it will continue to ascend. He's been paying it down. 30-year-old, he's, 24 or whatever, 30-year-old Dylan will look back and be like, damn, that was a good move. That was a good move.
I bought 3 personal houses for myself. All 3, I was told by professional realtors that I'm overpaying for them. 10%.
Right.
And my first one, actually, my father was the only one. I was like, it's like, there's land there. Just do it.
Yeah.
Three great realtors. And I'm like, don't. You're paying 10% too much, which would have been $17,000.
Thanks, John Corey.
The next
he
one,
watches every episode too. This will never land on his desk.
The big one was because I'm in the same neighborhood as Dave, just around the corner here. It was big. I golfed and it was like, it was a big deal. I had to pay $40,000 too much for a $400,000 detached house.
You pay $400,000 for your house now?
I want to say $430.
Good for you.
You know, but every comparable in town, it was a standard design.
Yeah.
It was $390.
Yeah.
And I showed the guy, and he was like, take off.
Well, that's.
And I was like, well, I like the cul-de-sac. I like the. I got to put the kids in the school. Who cares about the price?
Right.
We'll figure it out.
Yeah.
And I don't know if that's the right mentality, but it's.
You have to have some of that.
You got to jump in. You're always overpaying. Everyone I've ever talked to, the parents ask them, go home right now. Ask your parents what they paid $50,000.
Yeah.
Oh, I'm so jealous. Did you think you were overpaying? 100% of them would be like,
yeah.
Scary.
I was terrified. Yeah.
Terrified when I paid $50,000.
My parents paid $62,000 for their house. But then I said, well, how much were you making? My dad was working for the city, which was a good job. And he was making like $4 or $4.80 an hour or something like that.
Yeah. $10,000 a year.
Yeah. So
it's 5 times your income. But back then beer was 10 cents. So
right.
I could buy 48 beers a day every hour of work. So it worked a bit better. So.
And it was.
But that was a
detached
house, right?
Yeah, a detached house. They still live in it today.
So and obviously it's eroded that buying power. I mean, now you can have a job that makes $100,000 a year.
Yeah.
But you're not getting a detached house for $500,000.
Right.
Obviously, the schematics have changed, but you can buy something.
You can buy something.
And if you want.
Well, and townhouses weren't when our parents were buying it. Townhouses weren't really a thing.
No.
There was like you could have an apartment, or you could have a house, and that was all. And I think townhouses, man, like the way they make them now, so many of them can be your long-term. I don't really believe in forever houses. I believe in for your stage houses. Yeah. That's why we've moved 5 times.
I know, because you call me every 6 months. You're like, Jody, can you work the numbers on this house?
I do, for sure. And you're going to get another one of those pretty soon because that's next stage, right? And there's houses for stages.
Yeah.
And there's
100%.
And there's affordability. You have different affordability in your career. And this is what you guys deal with is like the changing of people's affordability is what I believe determines what are their needs from their family side of things and what can they afford. Those are the two things. And, gone are the days. I don't think many people are going to live in a house for 40 years anymore.
No.
They're not dead. There's going to be those odd people that do it.
No.
But like, my parents still in the house I moved there when we were 9 months old. When I was 9 months old.
I don't think it's a bad thing, though, Jordan.
No.
About the old generation approach, the great generations that fought wars and paid down debt and were scared to be like the credit card. Are you crazy?
Yeah. Their stress levels were probably way lower.
There's probably some good principles there that
I agree.
want to re-tap into.
Yeah.
But because and I'll tell people this. I break this down every time I do a pre-approval so people know the cost. This is what it costs. You have to pay property transfer tax every single day.
Yeah.
Real estate fees. If we can understand that and you're okay with paying these fees, I don't want it to be a surprise later.
Yeah.
Let's go to the next stage.
Yeah.
And I find most people are okay with that.
Yeah.
They've outgrown their
debt,
divorce.
Yeah.
Like things happen.
What is it? The 4 Ds? I did a video on it not long ago.
Debt, divorce,
divorce, death.
I think it's only
it's something
in the early 2000s we had drugs in BC. That caused a lot of real estate.
The other D is about debt, divorce, death, and there's one about having a baby.
Oh.
Because something about family growth is the other D. I can't.
Okay. That makes sense.
Diapers. Debt, divorce, diapers, and death.
That causes you to buy and sell a house.
Those are the main causes, and
the funny thing about diapers, it goes both ways. Because my kids are going to be moving out of the house, and I'm going to be in diapers. And I
knew you were going to say that. So. Yeah, no, for sure. Yeah, diapers makes people buy for either smaller homes as they get old or bigger homes as they add babies. But
here's one issue.
You're going to be like, I listened this long for this conversation.
I've cut a lot of.
We'll put little. Actually, Spotify puts in auto chapters.
Yeah. Okay.
So it all like if we get rambly, but the rambling part's the best part in my opinion. That's where the nuggets come out.
If you get diapers. I have a big issue right now.
That went over my head. Jeez.
I have a big issue right now.
Okay.
With everyone has issues with the government.
Sure.
But I have an issue with mortgages and them interfering.
Hmm.
They've done some good things, by the way.
Yeah.
Back in the past, when I bought a house in 2006, we had 40-year amortizations. And then the great financial crisis happened, and they cut back to 30 years, or 35, 30, then to 25 years.
Yeah.
That was good. I don't think we should have 40-year amortizations. In Japan, they have 99-year amortizations.
Yeah.
I don't know necessarily agree with that.
I think for first-time home buyers, maybe they should have a little break on amortizations. I think once you've owned a house and had the opportunity, maybe you should be given that break again. Like, you should have to be able to pay down your debt. But here's my issue. Even though they've done some good things, they brought in the stress test. And the stress test was not a bad thing either. If we talk about it, they add 2% to whatever your mortgage rate is, or they have this other number they work with, and you qualify for less house.
Right.
And that worked really good. It probably saved us a little bit over this last little run.
So, like, it saved us from defaults, right?
Yeah.
Yeah.
Of course, and then a lot of people do overconsume,
Sure,
and then get caught with rising rates.
Right.
Yeah. So it saved us a little bit. But here's my issue now. 3 years ago, if you qualified for 2% above your contract rate, 3 years ago you qualified easier for the variable rate than you did for the fixed rates.
Mm-hmm.
So everyone was going variable rate because you qualified for more house. And
Right.
everyone always pushes their limits. 90% of people push their limits on getting into a house. So now they went in variable rate. And
well, the Bank of Canada was saying this will not go up by more than 2%.
Our rates won't even go up.
Right.
They won't go up. Yeah. And then rates went up, and everyone got hammered. Absolutely hammered.
Right.
Now what's happening is we think variable rate or shorter term mortgages is the better play, but the rates are higher on variable rates right now.
Right.
Short term mortgages.
Right.
But they're easier. It's easier to qualify for a long term, a 5-year mortgage, a 10-year mortgage. It's easier to qualify for that. So now what the stress test is doing is forcing people into a bad mortgage product, because I think the smart move is take a variable and ride this rate down, but people can only qualify on the 5-year fix.
Yeah, so basically, the new rules are forcing people to take the wrong products.
Oh, okay.
You qualify for a 5-year fix, you absolutely shouldn't be in that.
Right.
Because that 1 year
going down.
That variable's going down, but we can't qualify. They probably should have a standardized.
No, they should have a standard. If you qualify on the stress test,
you can get
on the 5-year stress test.
Yeah.
You can take a variable or fixed.
Right.
You don't have to take. You're not forced into a product.
And we are big about consumers having choice. They don't know they're doing this though.
Yeah.
They're bringing in good rules for good reasons.
Right.
And there's just unforeseen consequences with rules.
Yeah.
And so this has happened 2 times where people took the variable rate when they should have a couple years ago, and now they can't take the variable rate when they should.
Right.
And so we have our clients' hands forced a lot of times trying to reach to the properties that they need, whether they're having, they're up buying or whatever, getting more bedrooms for diapers.
Yeah.
But, so it's an unintended consequence.
Right.
100%.
That's what happens with these quick, provincial or federal changes. Is like the recession period, like came in after the multi-offer scenario was basically done already. Yeah. And then they didn't, and it hasn't had a negative impact, I would say, but it's caused in some instances where people are a little bit more frivolous with their offering or tie up a property.
Yeah.
And then knowing they'll write an offer, no subjects, knowing that they can activate their rescission period and pay 0.025%, which to them is not a penalty, but it gave them an opportunity and hurt someone else.
So I had mentioned the 23 offers the other day. 6 of them were subject free.
Wow.
Strong deposit, 0 subjects. And this, of course, brought back very bad memories of that COVID.
Yeah. That 22 market.
We could not keep up with the number.
Everyone's just calling. Are we getting approved? Are we getting? Yeah.
And we couldn't write and give proper advice.
Right.
We had to go in subject free.
Right.
If you don't know what that is and you're listening, phone Dave Nash.
Explain it. I'll explain it.
But then they put in that rescission period, which is supposed to protect these buyers.
Yeah.
But people are still making subject-free offers, so they have the right to get out in like 7 business days.
Three business days, but it doesn't include over weekends, which is when most real estate activity happens.
Yeah, right.
And it's a 0.025% penalty. So
on
it's
your deposit or on the purchase price.
On the purchase price.
So what was that like? Obviously, I don't have my.
Yeah, so on $1 million, it's like $2,500.
Okay.
So it's
all right.
it's
so
it's
you have a $2,500 right to refuse.
Yeah,
okay.
And so what happens though is it causes people to be reckless or write offers that maybe they shouldn't, because 25. If you're in an investment standpoint, or if you have $100,000 down, and you want to tie that place up, but you're not sure, or you want to tie up multiple places, which you're not supposed to do, but people do it.
Well, it's not a real rule.
Yeah. Well, there are rules, and then realtors have code of ethics that they're not supposed to write multiple offers. But it's just unintended consequences, right? And so that's what happens when they
lose all those buyers. There's 23 guys that made an offer. You accept the wrong one,
right?
As the sellers,
and they rescind,
and those 22 other people brought onto another property.
Right.
Now, as you were talking about earlier, and now they're because it's always the same type of product everyone's trying to buy.
Well, it's the idea of it was, let's protect people who have to rush into these decisions, and it's like, well, what if we look more at why are they rushing into these decisions?
Right.
Not just let's provide them a little bit of insurance for when they F up.
Interesting next time you have a really busy market.
I think the rule should be everyone should have you can, as a seller, you're not allowed to give anything less than 4 days for subject to financing and inspection.
Yeah.
Something like that.
Like forced subjects is something that's been a topic.
Yeah.
Required subjects.
Yes.
Like a required subject to finance and a required subject to inspection.
You're a seller,
you don't want those.
You're like, and then so now, again, are we having a free market?
Well, and it's that whole conversation, right? Exactly. Do you want a free market or do you want a managed market?
I'm very selfish when I want 4 days for financing. That's what I like.
Mortgage broker has
totally.
It's like a lot of pressure for us.
There's been times where
unintended consequences, just like that stress test, though. You put in this with all the right reasons, with all the good intentions, and someone's going to get hurt on the other side. It's just the way rules.
And that's where people who argue for free market will say, like, just have zero integration of government, which I don't agree with either. But
that was the American way.
Yeah,
2007.
Right.
Dave and I could give a mortgage away in 2007 if you had a heartbeat, and that was even optional.
Right.
Like it was unbelievable.
And we were still doing better than our counterparts in America. And America continues to do boom or bust.
Yeah.
And I think that's why you see, in my opinion, a little more poverty, a little more loss.
Winning.
I think
more dramatic, like super rich or super poor.
We played it out fairly decent here. Obviously, you're always going to have spectrums. Top end and bottom end, but I think we do a better job of it. We all believe in, of course, health and all that kind of stuff. I think just as a society, we do a better job. So we will accept these rules. If you pull these rules, these some pretty good banking rules that protected us actually from that crash. If you introduce that in America, you lose their.
Oh, they'd have a civil war.
Oh, there would be. There would be brought out, and there would be pickup trucks.
For sure.
So
it's funny you talk about banking rules. I can't believe how different the banks look at the same client.
Right.
Where if you have a basement suite, the amount that a credit union will approve you for will blow Toronto Dominion out of the water.
They'll approve you for way more.
But people walk into TD and say, I want to buy that house. And all of a sudden they're like, no, you don't qualify. They're like, shoot, I don't qualify. I'll have to wait another year. Where it could have just been that bank's rule.
Right.
Or if you have a lot of money in net worth, TD will approve you for way more than the credit unions will approve you for. These people, unfortunately, it's so convoluted, the banking industry, that people think when they go to one bank and they get turned down, they're not going to go to the next bank. And that is the biggest lie.
Right. That's why, I always say in almost all of our videos, call mortgage brokers. Yeah. If you're loyal to your bank, I understand that. I do. 99% of my other banking is with one institution that I've been with since I was 3. Or my parents started me there. Me which maybe I should shop that too, because I'm being a bit of a hypocrite because I don't shop it.
I actually know I'm overpaying. I worry about other people's problems.
Exactly. Yeah. But the one thing I always say is, like, call a mortgage broker. Like, check in with and I know with you guys.
Call your bank.
I know with you guys, like, you'll say they're better. Go with them in this case. They're better than what I can get you. Yeah. And I've done all my stuff with you guys.
Yeah. And it's so easy nowadays too. You can call.
Well, and I
can go bank to bank and drive and banks do still make you come in. We don't necessarily, but and with these complex rules, the more rules they put in, the better it was for Jordy and I.
Right.
It made our jobs more valuable.
Yeah.
It made it harder to get in our industry.
Right.
Again, unintended consequences of putting in too many rules. You actually made it harder. Your job. We were able to more understand. With decades of doing this.
You can pivot with the changes.
But you need a professional shopper. Yeah. And it's probably not just even in houses. Like, I look at brokers in other industries too, and I'm very happy to have one.
Jones is overrated. Hey, we're back, and we're going to talk a little bit about some more current or specific topics. The first one was first-time home buyers.
Yeah.
And what is the process for them? I'll give you a bit of an example to guide this. Let's say they're like 30.
Yeah.
They finally got their like career type job, and they want to go get a 3-bedroom condo or a 3-bedroom townhouse.
Yeah.
I know what the real estate side is, but what's the mortgage side of getting that started?
It's fairly easy. It's a 10-minute conversation.
Okay.
Mm-hmm. That's it. You can actually just go online and fill out. But once again, you have to make sure you're talking to the right representative. We said earlier, one bank might approve you for 10% more house than the next bank. So the process is you just call a home mortgage rep, your bank. It's 10 minutes. Well, gather some income. If whoever you're dealing with has not asked you for any income documents on your pre-approval, leave that bank. That's not pre-approval.
Essentially, when the banks do it, it's pre-approved. Pre means before you're approved.
Right.
They haven't even approved you.
Right.
They took your Boy Scout honor. This is how much I make, but you actually don't know because you don't know.
Right.
It's funny that people don't know. You should have a couple documents asked for,
Yeah.
and you should have a conversation about closing costs.
Okay.
Because people get surprised all the time when they're first-time buyers, but they don't qualify for the first-time buyer programs.
Right.
Because our purchase prices are so high. 10
And will you
minutes
guys
on the
guide
phone,
them
boom,
through that whole process, the
Oh,
first-time home buyer program?
Oh, 100%.
I do.
Yeah.
Most people don't know it. Banks don't think they're supposed to.
Okay.
And really, on the purchase contract, you guys sign
Yeah.
a disclosure about potential closing costs.
Yeah.
And it's there, and you put usually a subject in saying, be aware of this and look into it.
Right.
Actually, can we talk about
We go outside the realms of what most mortgage brokers do because we've been at it so long.
Yeah.
We've been in generations of it. But yeah, in that 10 minutes, we're going to cover a whole bunch of stuff and make sure you're really prepared to do this.
With that being, if you bought a house in 2023, you're a first-time home buyer, tell your accountant you're getting $5,000 tax credit.
Oh, nice.
So that's coming up soon.
Okay.
So,
Good advice.
Yeah.
So let's talk about you guys specifically. Let's say I've talked to these people, they're ready to buy, and I'm like, first step is call.
Yeah.
And I give a list of 3 because I have to.
Yeah.
But they decide to call you.
Of course,
So they
Dave
call
and Jordy
you.
at the top of the list,
Dave,
right?
Jordy.
Just a little bit bigger font.
And Dave and Jordy.
And then the
That's them saying
A's,
that's not true.
as it goes
Do not,
down.
PCFSA, leave me alone. I do not do that. That's not, I said the same font every time. No, but let's say they decide that they've seen your ads because they're active on social media. They've seen your ads and they reach out. What information should they, I think what happens a lot of times is people don't make the first call because they don't know what to expect.
Right.
So what should they have, or do they even need it? Just make the call and you'll guide them.
Have a couple years of T4 history income.
Yeah.
And that's it. That I can usually do enough with just knowing the last 2 years history of your income plus
If you're employed.
Yes.
And if you're self-employed, we might ask for your
Will you
2
see
years
that?
tax returns.
Right.
Which everyone has at their fingertips on a PDF. And generally, I just circumvent, go straight to the accountant.
Yeah.
And start talking to them like, let's speed this up.
Yeah.
Let me get the stuff. And
It's
we
actually
take
one
over.
benefit about you go to your bank and they're like, get us these documents. Or Dave and I are like, okay, you just chill out. We'll make the calls for you.
Nice.
Yeah.
And it does make it a bit easier because I also know what to ask accountants. Sometimes you go to your accountant and you're like, I don't know any of my tax stocks. And you bring a stock, it's wrong.
Right.
They went to send you back.
Yeah.
Sometimes easier for us.
And there's explanations. Why is it another income? Why did we write this off this way?
Yeah.
How did you move this around? So because we can add this all back.
Because you're trying to write a story to
Yes.
the underwriters.
Yeah.
You're trying to say this is why they should borrow this money. Right.
And then what I do next is I go through, I have a whole history of rates, a whole rate presentation, where it's going, what we think is going to happen according to history,
Yeah.
what the banks are predicting.
Yeah.
Because when I went and got my first mortgage, they're like, you get a 5-year fixed. That's what you get.
Yeah.
That's your mortgage.
Yeah.
You never even talked about variable. Is the 1-year term at a higher rate better than the 5-year term? Yes, it probably is right now.
Right. Right.
So
Unfortunately,
educate. There'll be the history of the last 5 rate events,
Yeah.
and we're in a rate event right now.
Right.
What did those look like? How quickly did they come down?
Yeah.
And what does that apply now?
Right.
And, on top of it, if you did take a strategy like a variable versus a fixed, what are the savings right now with predictive rate drops?
Yeah.
And if it doesn't drop?
Yeah.
So we have some spreadsheets about going forward as well as looking back. We want to teach them some stuff.
Yeah. What about when you work with a mortgage specialist at a bank?
Yeah.
The help clarify like what they're going to be representing as far as product versus what you're going to be representing as far as product as mortgage brokers.
a good example is
It's identical.
It's not identical in a way.
Oh, sorry. Maybe that was a poor question. What I mean is, if you work with a specific financial institution's
Yes.
mortgage specialist, they're only going to be providing you their option, correct?
Sometimes they're
their
good.
bank.
Yeah,
And
sometimes
their
they're
bank,
Yeah.
right? Their product. They're
Well,
not
we
going to
can go to
call
every
First
bank.
National. They're not going to
No,
call
no.
private equity. They're not going to call any of that stuff.
First National's variable rate right now is about 0.45% lower than Envision on certain purchases.
Okay.
0.45% on a $300,000 purchase adds up to about $7,000 in savings over the term of the mortgage.
Right.
It doesn't sound 0.2% saves you 1% of your mortgage. So if you have $500,000 mortgage, you save $5,000.
Okay.
It means a lot.
Yeah.
And some people say, "Oh, it's only $5,000." I don't know.
I don't say that.
That's $1,000 a year. I could sure use that.
Yeah.
Most people don't come to us for the savings, I think, though. They come for the service and the knowledge.
Yeah.
I hope to get you a trip for two to Maui for a weekend in savings by dealing with me.
Right.
But hopefully we also educate you, make it easier. It's so stressful to buy a house. We want to be able to be available.
Yeah.
And we'll text and be available on the evenings and weekends.
Yeah.
And of course, when we have a relationship with the realtor, that's easy.
Yeah.
And you guys love it too.
Yeah, definitely.
Because trying to deal with a bank that says, nope, there's a privacy
Yeah.
wall, you
Well, when
can't
you guys
ask
need,
questions.
yeah, like I can think of when you guys need the subject removal form or you need the PDS, rather than bothering the client who doesn't even know what these things.
No.
We review them with them, they sign them, but they don't know the my term and name.
No.
It's so much easier when we can just go behind the scenes.
Yeah.
One thing I'm seeing a lot right now is people trying to refinance their house.
Yeah.
So renewals come up, they want to add some money on.
Yeah.
And how many people can't qualify for their own house? So when it comes up for renewal, your bank will renew you. Don't worry about that.
Okay.
They don't usually requalify you if you've made all your payments.
Right.
I actually have a mortgage on my house with a line of credit behind. And I utilize line of credit for business. I tried to reapply to see if I could qualify for my own mortgage and line of credit. I can't.
Wow.
With my income.
Right.
So if people are facing that. Now the funny thing is when you're going to, I had a client that was in a townhome, couldn't requalify for their mortgage, but then they wanted to sell and buy a house with a suite, and I could qualify for the house with the suite the way the rules were.
Right.
So that's just different rules with different banks.
Yeah.
But sometimes I've seen cases where people have lots of debt, don't know what they do.
Yeah.
There's a rule that you can only refinance up to 80% of your house.
Yeah.
So they can't clear off all their debt. So in certain cases, I've seen people sell their house, pay off all their debt, and now they're left with $40,000, $50,000 left.
You go 95 on a purchase.
You can buy another house with 5% down. So now you've cleared off your debt. You're still a homeowner.
Yeah.
It's not the same place you were in before.
Yeah.
But there's a maneuver there. If you're in lots of debt,
you are triggering real estate costs and property transfer tax, but you are getting a better interest rate on the next house as a purchase.
Yeah.
And they'll allow you to borrow more, 95% on the house versus
a better
5.
lifestyle.
Or
better, that's
the
credit card debt, right?
car loans.
Yeah.
and maybe you can move up.
Well, we all worked.
as well.
I won't mention names, but we all worked on a situation where they ended up forcibly downsizing from a house, and they went into a condo.
Yeah.
And for them, what I was so impressed by them was that they didn't let their ego get in the way of it all. Because that's what always happens, right? Is the ego gets in the way. It's like, we already have a house. We're going to take 2 steps back.
Yeah.
But when they did it, the wife, she said to me, she's like, I can sleep again now.
Yeah.
She's like, I didn't realize how much this would like relax me.
They're gonna stay married. And do you know how much
Right.
money they staying married?
Yeah.
That's right.
So like,
That's yeah.
Quality of life is everything.
Right.
I talk about that with people all the time too. Is this a quality of life decision, or is this just a pure financial decision?
Right.
So I can talk both ways.
Yeah.
I can get right down to the minutia of a 1%
Mhm.
return here versus a 3 there, or does this one just feel better every
Yeah.
day? You know, and I can give advice on both sides of the coin because I made decisions for purely quality of life.
Yeah.
Whether that's taking a smaller payment, I could probably pay down more.
Yeah.
Or whatever it is.
especially with renewals coming up.
Yeah.
So we're now hitting that first cycle of renewals where rates were a lot lower than they are
basically
now.
free.
where
just
the
did-
free money
yeah.
is getting cashed
It
in
wasn't
now.
quite
For
free
the next
5 years
2
ago,
years.
Yeah.
but 5 years ago rates were in the low 3s,
Right.
and now we're in the mid 5s. So I just did a $500,000 mortgage. Payments were $2,200. Now his payment goes up to just under $2,800. So that's a $500 jump. That's 20-something% increase.
That you have to plan for that.
So, well, if you're like some people, you just bury your head in the sand. You're like, I don't know what to do.
Yeah.
You should do some pre-planning calls and say, hey, what's my renewal? What's it going to cost?
Yeah.
Because if it's going to cost you more than you can afford, you don't want to wait last second to sell the house because then you're going to fire sale it.
Yeah.
You should be calling us now. Your renewals come up in November.
Yeah.
What are my payments going to look like?
Yeah.
The payments are going to look like this. if you don't feel like you can afford that, that gives you time to work with a realtor to maybe plan on selling it and downsizing.
Yeah.
Or there's sometimes, or
moving to a new town, or
Like-
nearby, but a little cheaper.
Yes.
If you're in Abbotsford, you still can get more house for less money in Chilliwack.
And there is a chance we can restructure it. Once again, you have to re-qualify.
Yeah.
Which some people don't qualify for their own
Yeah.
mortgage. But you can do, if you do qualify, you could extend it back to 30 years.
Yeah.
And your payment goes up still.
Right.
But maybe only 10%.
Yeah.
But that's where I'm just saying, in this market of this world where rates have gone through the roof, do some pre-planning.
I couldn't agree more, man. I'm a huge advocate of just as scary as it might be, get the information to make a plan. And just, if you don't get the information, you're going to have your hand forced.
Yeah.
But if you know what you can, I bet most people, I'd be concerned for most of the people that are on a fixed mortgage right now, how many of them even know their expiry date?
Out of rental, October 27th of this year, my rate is 1.64%. I did a 4-year mortgage or a 3-year mortgage. It was at the very bottom.
Yeah.
And my payment goes, it's actually $465,000. It goes from was it 2,100 up to 2,900 because I was at such a low rate.
Right. Yeah.
I restructured mine down to 1.8, and we were fixed guys, and everyone was doing variable.
Yeah.
You
guys set me up with.
We'd seen too many.
We
generationally had heard stories of the 80s.
Yeah.
And whatever. So we tend to be more cautious than
Yeah.
most people. I restructured. I paid to restructure.
Yeah.
Again, this is quality of life decision.
Yeah.
But then I actually matched my payments to higher payments I thought were going to be in the future. I actually increased them, so I was paying down more principal.
Yeah.
And when my payment shock comes in a year, it's actually not going to be so much of a shock.
Right.
So again, I could have taken the cash and spent it every month,
Could've
and it would have been a shock now.
Yeah.
But that was more of a strategy where I actually chose to pay more, where I won't have as much of a shock.
If you did a 4-year mortgage like me 4 years ago,
your
payment's going to go up quite a bit.
I'm on a 5-year at 2.2.
Yeah.
And that expires next September.
And the good thing is,
and I go double check it every once in a while to make sure I'm not
I
actually expiring sooner than I think.
Yeah,
and
totally.
I think people need to, if you're in a mortgage right now, if nothing else from today, go check your mortgage expiry date.
Yeah.
And then once you've done that, reach out to a mortgage broker and just get the information.
Yeah.
You know, I refer these guys in business because I think they do a great job. But if you have some, to go get the information.
If it's debilitating, maybe I can get you money to put in a basement suite, and you have 8 months to do it.
Yeah.
Maybe we talk about the dining size, buy the size. You know, like maybe we start talking about those strategies. What are all my options? Get all your options.
Well, like Jordy said, if you do end up having to sell, sell in April, May instead of selling in December, January.
Yeah,
because you've now planned this ahead.
Right, exactly.
When there's less, we just know, like, I did a chart on 10 years, and year after year, it goes like this through the early spring, it slows a little bit in summer, there's a little blip in fall, and then through winter, it goes like that, and it's just year after year.
Last year was a classic.
Like, you can copy and paste that.
If your renewal is coming up, and you're planning on selling the next 2 years, talk to someone.
Yeah.
Because the penalties could be, I saw penalties back in the past of $30,000.
Yes.
Right. If you lock it on a 5-year fix, and you're planning on moving the counties in 2 years.
Yeah.
These discounted rates, IRDs, are going to become a conversation again in the next 2 years as these rates come down.
Yeah.
And you're locking in, even at a good strategy.
Yeah.
A 1 year, 2 year, 3. You may find yourself also paying a differential. You promised to pay them 7%.
Yeah.
As the right product.
Yeah.
But then you trigger a sale a little too early. Well, now the rates are down to 5. You own the difference.
Yeah.
You know,
they don't just walk away from it.
That's why
You
interest
pay.
rate different. We're in a contract.
Yeah.
So that's where a variable would be good if you know you're going to sell.
Yeah.
2 or 3 month interest only, always and forever.
Yeah.
You know, so there's other strategies there. So know what you're going to also do going forward.
I just had a client had a 5-year fix.
Yeah.
I can port my mortgage story. Yes, you can. It's great. Where are you moving to? Oh, Lethbridge. Who are you with? Local credit union. Credit unions don't cross borders.
Right.
Yeah.
So if you're going to move to Lethbridge, now we have to maybe leave your bank. If you want to lock on a 5-year fix, and go to a more national lender. There's so many variables when it comes up to planning.
Yeah.
So when you talk to anyone, tell them your future plans. I'm planning on staying here for 10 years, 5 years. I'm planning on having a kid in 2 years. Because that might change the mortgage lender's decision on what.
And sometimes you don't know what your plan is. It's just these are things that could happen.
Yeah.
You know, like I was thinking about maybe taking an Alberta job just because of cost of living, or there's also a chance. I get this inheritance. I might want to move downtown. that would change my advice. Just
Yeah.
those two little pieces of
Right.
information on what lender, what rate, and it's not always what rate.
When you don't get to punch that in on said bank's website, mortgage calculator,
And
there's
everybody's-
variables.
They're so secretive. They don't want to tell you. If I tell them that, I might get turned down.
Right.
Tell me everything, because
We'll
now you'll be mad at me
we'll
if you
figure
don't
out
tell
the
me
rest.
everything I give you bad
Yeah.
advice.
Yeah.
That's on you.
Oh, and people, anyone new that's into technology and say not a generation, whatever I am, X, pick up the phone and let's have a conversation.
Sure.
The conversation in 10 minutes, I'll ask you 45 questions.
Yeah.
And you don't even know it.
Yeah.
And I'll understand your problem. Doing it by text message and trying to fill out an online app, there's a time and place to do that.
Yeah.
But you have to have at one point
Yeah.
a verbal conversation. I don't know how many times I call. I
Yeah.
can tell I was just put to voicemail.
Yeah.
And I'm like, it's 6 at night. Like, what are you doing?
Yeah.
Yeah, no, like,
Right.
it was like, I know you're not coaching something. You
Yeah.
haven't kids yet. Anyways, have a conversation. Don't be scared of the phone.
Okay.
Yeah.
Hey, I know you got to get going.
That's
So-
very, very important.
Dave,
The golf course round.
You did a great interview.
Yeah.
You too, sir. You're the best. You're the best.
Thanks.
Thanks.
Yeah, thanks for coming out. And if you guys ever want to reach, what's the best way for them to get a hold of Browne Mortgages?
Honestly, Google. You'll find Browne all over the place.
Browne
with an E, right?
Yeah.
Browne Mortgages.
Yeah.
BrowneMortgage.com, and you'll find all our phone numbers on there. And one thing about us, we have 5 or 6 brokers. It doesn't matter who you deal with.
Yeah.
We all get paid the same.
Okay.
So if you hate me and you like Dave, deal with him. That's fine. I still get paid. So, all right.
Awesome.
Cheers.
Thanks guys for coming
Thank you.
coming on today. That was great, and thanks for tuning in today. And stay tuned. We'll have more episodes coming your way shortly.
Hey, you guys.
Hey.
That's ISO?
Rack it up, I gotta build up the bank to make me a safe house. Shake it up, she got her hands on